Yesterday, we got hit with some really big news in the prop firm space. And for traders out there who have been affected by this, the FTMO situation is definitely a devastating one for many people who use FTMO to trade certain products. And in this video, I'm going to be going over what we know about the FTMO situation, as well as what this could mean for the future of the prop firm space. What are things going to look like now that one of the most notorious names in the industry, like the OG one, just banned US clients? It's a really big deal. And in this video, I'm going to break down as much as I know about the situation. So again, let me clarify here the situation. If you are somebody in the US who already has a funded account with FTMO, I believe, to the best of my ability, you still have your account. But if I'm wrong about that, please someone let me know if you've been kicked out of your account. But what I know for sure is that they have stopped more accounts being purchased or challenges being purchased by US people specifically. And that could, and this is speculation, could expand to other places with more strict regulation like the UK, Canada, Australia, etc. That is possibly on the horizon, but we don't know that just yet. Today is really in focus for US traders who have gotten the short end of the stick with this recently with the My4X Fund situation and now the FTMO situation. I mean, these are the biggest ones, but it asks a question. If they're, picking off the biggest ones, if regulation is kind of scoping in on these ones first, who's to say that all the little ones are not yet to follow? If you're the regulatory body, the SEC, if the CFTC, if you're looking into this situation, you probably start with the biggest names in the industry who are offering US customers these products. But that is the next part I want to get into this video. Why? Why are these things getting taken down? Why are US clients not allowed to trade it? I'll break it down really simple for you. And I'm pretty sure once you see this, you'll understand why these things are getting picked off the US marketplace pretty quick. Okay, so to help us with this simple illustration, I've got 3 sections on the screen. You can see U right here, FX prop firms, which is the topic of today. We're not talking specifically about futures prop firms. We'll talk about that in a moment. And finally, high leverage and CFDs. This is kind of the product that US traders are after. And they aren't able to trade with high leverage and CFDs in the US because most of these things are actually illegal. So when a trader in the US, now this is a US specific, and if you're not in the US, then of course it might be relevant to you depending on what country you're in. Some countries have stronger or tighter or looser regulations. Regardless, let's say you want access to these products you're in the US. So you say, okay, yeah, I want to go trade with some higher leverage and I'd like to trade CFDs like NASDAQ 100 or XAU USD, etc. But the US government says, no, you can't do that. Those products are too risky for our traders, and I am not here to, defend that. I'm just telling you what it is. The U.S. government limits the leverage, the products that we can trade, in the name of, at least in the best hopes of, keeping people from losing a lot of money. I believe this got a lot tighter during the Great Financial Crisis, where a ton of leveraged products led into one of the worst recessions ever, right? We saw a terrible post-2008 period, and it was because there was just so much leverage galore. So the US, at least trying to defend the ideology, the idea is they don't want the common trader. I'm not necessarily saying that you as a listener are the common trader, but somebody who's not yet, profitable, they don't know what they're doing, can get their hands on too much leverage and destroy their personal finances, or even on a grand scale can destroy the economy. So there is a ideology behind this. It's not just we don't want US traders to have any fun. There is the idea that they want to sort of protect the consumer and the consumer strength for the economy. Regardless, let's talk a little bit about this. So what do traders do? They say, well, I can't go directly to high leverage CFDs. If you've ever opened up a US brokerage, you'll notice that if you trade FX, you have a limited amount of leverage. And if you try and trade CFDs, they're not available to you, right? CFDs are strictly not allowed for US traders. I'm talking about things like XAU USD, NAS 100, US 30. You cannot trade those things as a US client on a regulated brokerage. They do not exist. Right? So a US regulated brokerage will not allow you to trade CFDs. It limits your leverage. And again, in the scope or the idea that they are protecting you from too much leverage. I'm not saying that that's right. I'm saying that that's what I think the belief is. Now, what do traders do, and what have they been doing? Well, they say, well, if I can't get it through a legal means, I will try and do a legal scapegoat or a legal workaround, which is I will go through a prop firm who can access these things and who can basically pass these things to me, right? So a FX prop firm that's based in another country, they might be able to use, CFDs or, do that sort of exchange on your behalf. You're just trading through a vessel, right? And the government seems to be catching on to this little game, right? They seem to say, oh, yeah, so you're just going through this medium. So now the government potentially could be, these are guesses. This is my best guess is what's happening. They might be slow to act, but regulatory bodies are not completely dumb, right? They know that people are doing this behavior. And so next they might be coming to say, no US clients can use FX prop firms, because it makes sense. It's like if you went to go ask mom for something and she said no, and then you ran over to dad and asked for something and he said yes. You're going to get in trouble at some point or another. That's what's happening in the Forex prop firm right now. Mom said no. Now everybody's asking dad, and dad's saying yes. But now mom's figuring out that dad said yes, and now they're having a conversation in the back room. They're getting, heated, and now they're going to come out and both say no, right? That's what I think is happening in the firm space right now. Now, the idea here is that, again, if the U.S. government can check this out and they say, well, hey, you cannot be accepting U.S. clients, otherwise we've got issues, and that's starting to happen, these prop firms seem to just be saying, okay, no U.S. people then. We're just not accepting U.S. things. Another side of this that I believe is a potential candidate for why this is happening is payment processors. Like we've heard that Stripe has some certain issues. They don't like certain activity for paying for challenges. They're not big fans of that. They believe, I'm not necessarily speaking for them, but maybe it's because they think it's too akin to a gambling site, or just from the eyes of like a payment processor, maybe there's a little bit of hesitation on that front. Who knows exactly? These are my best guesses. As with all of these sort of videos, I'm just covering the best that I know what's going on with this situation. But I believe that this is kind of the scenario, and I believe that U.S. regulation is saying, hey, you cannot be doing this. You are offering things that are not allowed to U.S. people by proxy, and they're figuring it out, right? So that's why we've seen two of the huge ones in the industry get completely pulled from U.S. clients. And clearly, yes, these may not be U.S. companies, and so they say, well, why can't you offer business to U.S. people? The long arm of the law seems to still extend to other places. I mean, my Forex funds, and of course, we also have the FTMO situation. Now it seems like there is a strong long arm of the law that can still infiltrate and stop these behaviors from going on in the protection of the U.S. customer. And again, is that right or wrong? I'm not here to say. I'm telling you what I believe the stance is and why this could be happening. So I think it's very worth understanding why this is potentially going on, but now I guess the question is, what do you do about it? Well, remember when we first got on this page, I mentioned that this is specifically FX prop firms. I think futures prop firms for US clients are the way to go. And this is my opinion too as well. If you are really insistent on you want to get funded, futures prop firms might be the way to go, because of course it seems increasingly likely that FX prop firms are in the scope, in the sights of the the regulatory body stuff. So I think that, futures are US approved. You can trade futures in the US, whereas FX, there are strict regulations. Have you ever wondered why there's only a couple US Forex brokers? It's because the product is very limited in the US, and for a reason, right? There's a lot of leverage that can be used in FX, and there's that. Futures, however, is perhaps the way to go. So maybe what we do is we consider the future side of things. If you want to trade things like gold, if you want to trade things like, like indices, you could look into a couple different options. Now, first of all, if you are somebody who is in the US and you'd like to just say, you know what, I just want to go the brokerage side, I have a couple links down below in the description. If you are done with the prop firm stuff, if you're like, I'm tired of this, every time I'm looking at things, I'm getting, closed out of my accounts and losing access and all this and that, you could also go the old-fashioned way, which is what I like to do. I just trade my own personal capital. And if you don't have a lot of capital, that might be just fine that you accept that maybe it's time to just work up a trading account over time, rather than trying to jump to funding when there's just uncertainty in which one's going to go down next. I think the way to approach this personally is either to go the futures route or to trade with a US regulated brokerage so that you're not going to get booted off the site as soon as you start getting things up and running. Either way, I'll leave it up to you, but down below in the description, if you do want to support my channel, if you enjoy this content, if this is helpful to you, if this research that I do is beneficial to you, do me a favor if you'd like to and use the referral links down below in the description for brokerages. If you use them, there's special sign up perks there available to you. There's all sorts of different things. You'll just have to check out the description to see which ones are available to you, whether you're in the US or if you're outside of the US. I have some other non-US brokerages that might be a great fit for you as well, all linked down below in the description. Thank you very much, guys, for watching this video, and have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.